In Money Watch, the Dow Jones closed the day relatively flat, up about 50 points, just under that. The S&P 500 and NASDAQ also ended the day in the flat. George Ball joins us now. He is the chairman of the investment firm Sanders Morris Harris. George, it's good to see you. Tell us what was driving the market today.
The market drove around in an endless circle today. The market was full of sound and fury, signified nothing. And it's really happened since the first couple of weeks of January. There is no impetus. There is no new holy grail for the market. Early in January, 6 stocks drove the market up. I think the S&P is up 7.5% for the year. If you take out those 6 large technology stocks, the market is otherwise basically flat for the year. And right now, the market did nothing. It was a nice day, probably good for commission brokers, but it didn't do anything for or against investors.
You know, I almost feel like the weight of consumer debt is just weighing upon us. I can almost feel it in the room. It has passed 17 trillion for the first time ever in the first quarter of 2023. This comes despite a slide in mortgage demands. What does this all mean for consumers and the housing market, which is at a tough place?
The mortgage originations are an interesting, slightly technical question. First, a part of mortgage originations is the refinancing of mortgages. Anybody who's got a mortgage that was issued in the last several years is paying 2.5% to 4.5%, and they are not refinancing their mortgages because they'd be paying 6.5% to 7%. They're also keeping their houses. So mortgage originations are low. Doesn't mean that there's low demand for housing, but people who own a place and have a mortgage on it are not moving out, and that's just the way it is. Consumer debt is high, but at the same time, net consumer savings and investments are also quite high across all income quintiles, by the way. So debt is up, but it's more reasonable than it was in 2008 or 2009. I don't think we have a consumer debt crisis on our doorsteps, because there are savings and investments that offset at least a part of it. We are not fiscally irresponsible as a nation.
Now, I want to move you on to a different theme. EU regulators, which may or may not have been affecting the market, EU regulators have approved Microsoft's acquisition of Activision Blizzard. Have previous concerns about cornering the gaming market been addressed yet?
The gaming market is a case of what I'd call dueling regulators. I've obviously been around for a long time, and I've never seen a case where you've got the FTC, the Federal Trade Commission here in the U.S., suing to block the merger. You've got the Competition and Market Authority in the UK saying, no, it can't go forward. And now you've got the European Commission saying, well, with certain provisions, yes, it can go forward. So online streaming and gaming has become a central point of regulatory conflict that is different, greater than anything that I've ever seen. It's a mess. If you're an investor, I'd scratch my head and walk away. If you're a online gamer, I don't think it makes a whole lot of difference, but it's a very strange set of regulatory conflicts that is really without precedent. I'd laugh about it on the one hand, but it's sort of tragic on the other.
Well, yet another arena where consolidation is concerning people. George Ball, thank you so much for that.
You're welcome.